ST69 wants to know how the luxury market's performing compared to the median price points for the Twin Cities. So if you haven't already, I've got full market updates. You can go see that video. I'm not going to rehash how the shift is going on, but let me show you my screen right now, and I'm going to take you on a journey of answering this question. Here's what you're looking at first of all. I want you to watch these top little brackets here. I figured out the median price point we know is about $365,000 in the Twin Cities. So this blue line here is the lower price brackets, and then the red is going to be those upper brackets. So as I take you through this little journey, you're going to want to keep an eye on that top column. I'm not filtering it by anything else, but if I just look for the last three, it goes back to January 2020, the last 3.5 years. You're gonna see a couple of things. First of all, that blue line there, that would be those lower, median, and under bracket homes. Those went up by 13.8%. versus the red line there only went up by about 6%. So more than double the price appreciation actually for that lower price bracket, which I thought was really interesting. But I did run into the first trouble, the first little snag, and that is if we're looking at the lower price brackets, we're gonna be including single family townhome and condos as well. But I was thinking, townhome and condos are primarily only in that lower price bracket, and I think that's gonna skew the numbers. So let me show you what I did here is I took that same price bracket there, but I actually just filtered them by single families only. So I think if we're looking at this conversation from a really accurate data perspective, we've gotta filter out single families. So when I did that, it did skew our numbers just slightly. And so that blue line there, the lower price brackets, instead of being 13.8, they actually went up by 14.5%. So more. And then our upper bracket went, instead of 6%, only single families came to 8.2% over the last 3.5 years. That's not a yearly number. That's from January 2020 until now through July 2023. So overall, at first glance, you would say, all right, the lower brackets have performed exponentially better than the upper brackets. But then I ran into a couple more problems, and I was thinking, well, over time, we know that homes are going to go up in value about 4% per year. So wouldn't that naturally argue that just the sheer number of homes in those lower brackets are going to become less and less, because a home that was 200 is now worth 300, and then what was worth 300 becomes worth 400, moving it from the lower bracket to the upper bracket. And the thing I realized was when I looked at this closed sales number, and I saw this, and I thought, okay, well, hold on, the number of sales happening at the lower brackets, you can see, is dive bombing there versus the red line was going up. And so I thought, well, that was pretty fascinating. So then if you scroll out, this even became more fascinating because the number of sales happening, again, you would think if the price brackets moving up, there would just over time be less lower brackets and more upper brackets, right? That's not the case. They actually stayed relatively parallel for quite some time until here recently. So that threw my head into a tailspin, and I think what you're gonna find is really, really fascinating. First of all, at first glance, what I did notice with this, I wanted to point out, that blue line being our lower half bracket homes was exponentially more volatile during the last downturn. So I think that's really fascinating. You can see here, if we're starting 2006, 7, 8, that's when we saw the last bubble pop and everything crashed. The number of luxury listings did go down, but not that significantly, versus you can see the number of lower end homes actually dropped considerably more, and then has just been much more volatile up and down as far as the numbers go. Sale prices, also the same thing. So with our luxury, that actually stayed fairly flat over that period of time, versus all of our lower end homes. The price of the lower end homes just dropped dramatically. So I thought that was very fascinating. It did also rebound more significantly. So whereas the red was more of like a slow incline, the blue dropped and then came up more significantly. But then I thought as well, are we really talking just the upper and lower brackets? Because if the homes get more expensive over time, then that led me to, well, maybe I should see what the different quartiles are doing. So now what you're looking at is blue on the left hand. This is going from the lowest being quartile 1, green is quartile 2, purple 3, and red 4 being the most expensive. So first, second, third, fourth quartiles. So I'm still only looking at single family homes, and we're looking at those. And then I thought, all right, well, first of all, this is no surprise, because as we see homes increasing in value over time, there will just simply be less at the lower price brackets. So that wasn't really surprising. But then I was looking at sale prices, and I didn't notice any real notable difference. This is the last 3.5 years, and I thought, well, I think there's still a little bit of flaw in that logic. And to boil this down, there really was no data or research that I could go to that somebody else found it. I had to do a lot of this kind of legwork for you. But I came to the conclusion of this: it actually doesn't really matter. Does it matter what the price point is that it started at from 3 or 5 or 10 years ago versus what it is now? And I think that's actually the wrong way of looking at it. I've never been asked this nuance sort of a question on the different price brackets of the market. But I think I struck gold when I shifted my thinking off of the price points of the home and actually on what is, I would say, the most defining feature of a luxury listing versus a more modest, affordable home is going to be actually the size of the home. Now, you can see at the top here, these are the only categories or filters that I really have to define the market. But I did a whole way too much research I won't go into, and I narrowed it down to figure out the median square footage of a home in the Twin Cities. Take this to your next trivia night. Is 2,075 square feet currently. If you look at this graph, this is the number of closed sales since way back. And it's actually kind of fascinating because you can see that from that price point, you can see today's day, right? We have basically the same number of homes selling above that square footage and below it. However, back in the day, that was a much wider spread, which tells me homes have been getting slightly bigger over time. Not really surprised. So then if we define it that way, all right, let's look at the smaller homes versus the larger homes versus lower and upper bracket price points. And that's really where we were able to determine a lot of really relevant information. So first of all, if we're looking at smaller homes, those are currently going to cost you about $320,000 versus those upper bracket. The median on that is going to be $520,000. So that was fascinating. I've never pulled up that nuance, but it's going to cost you about $200,000 more for the median home over versus under. So how are these homes performing over the long haul? Let me give you some data. I'll pull my little cursor back here so you can see from back 2005. Why don't I zoom us into just the last 3 years, since you can see they've run basically parallel. If I go back to that far, you can see $250,000 is where the smaller price point homes, that blue line is where we started, January 2020, and then we're currently at $320. So that's up 28% or $70,000 over the last 3.5 years. So remember, when we were looking at this before, the lower bracket homes were 13.8 and then 14.5%. That wasn't accurate, but we can see that the smaller homes are 28% up over the last 3.5 years. Upper bracket homes starting at $400,000 and they're now at $520,000 for that median size upper bracket home. That's going to be a 30% increase in their sale prices. So the smaller ones went up 28%, the larger homes went up 30%. So in my mind, over the course of 3.5 years, that's not a very significant number. It's only 2% more. Now, if you're buying this as an investment property, you could say, well, really what is gonna make me the most money? The smaller homes went up in $70,000 in value. The larger homes went up in $120,000. So there is some benefit to that. And I'm going to circle back to investment properties. But now that we know that the market's shifting in the Twin Cities locally and we're seeing interest rates going up, and SA's question was primarily based on, are cash buyers at a luxury price point less affected than interest rates with mortgage buyers at the lower price points? And this is really what I found for the last year. Let me pull up one more graph for you. This is median sale price. We're only looking for the last year, and the previous numbers have all been the rolling 12-month average. This is showing you the exact sale price differences from 1 month to month. It's not a rolling average. So if we go back to just July last year to July this year, and only we're looking at just 12 months time frame, you're gonna see that those upper brackets, the lower brackets, the blue line there, went up by about 2.7% in the last 12 months. The larger homes went up by about 3.8%. So in that sense, it's, one could make the argument that the larger homes are a better return on your investment. That's almost 50% more that you're making versus the lower brackets. So that was pretty fascinating. I would have thought that the smaller homes, the more modest entry-level homes, would have actually gone up in value more. As the market gets squeezed, people can't afford as much at the higher price points, and so they have to shift their budget down to get the same payment, the same $3,000 a month. Maybe whatever, before you could buy at $400, now you can buy at $350. So that would shift more demand to the lower brackets. That's actually not the case. That's not what the data is saying. We're seeing 1.1% higher returns over just the last 12 months for the larger homes than the more modest homes. So that was very interesting. Then let's flip it though back to if we're buying an investment property, which would be the better investment? If you're buying this as a single family home, it doesn't matter. I mean, you're going to buy 300 or 400 or 600 or a million or whatever your price point is, whatever your budget dictates. But as far as an investment goes, so if you're seeing the larger homes as a better return on your investment, that's one way to think of it. I would argue personally my own investment strategy is I would actually rather buy two, let's say $300,000 homes than one $600,000. And the reason for me is, yes, I'll make a smaller return on each property. However, if one of them is vacant, I've at least got rental income coming in on the second one, and you're diversifying that risk financially. If you're buying it for an investment property, personally, I would definitely stick to getting multiple properties at a lower price point versus one at a larger price point. But if you're looking for buying your own primary residence and you're concerned that you're going to be making a bad investment because of the valuation shift, it's not. It's actually going to be a better investment. The larger homes are going to have a greater return on their investment by almost 50% versus the more modest size homes. So that's what's going on in the Twin Cities real estate market. Thanks SA69 for your questions. If you have more questions, I'd love to see you in the comments down below, and you can find me in the description.